Hi everyone, welcome to my YouTube channel. My name is Tabitha. If you haven't subscribed to this channel, please subscribe. Today we are going to talk about step 2, financial freedom. Everyone and everyone is everyone have a different approach to this thing called financial freedom. And sometimes we might not even achieve it because we haven't really planned ourselves out the way it's supposed to be. And for me, I'm trying to use my approach, and hopefully it will get me to financial freedom. So the first step that I took was to get a life insurance. I took a course called LLQP, which is insurance certificate, and explain more about insurance and what insurance are good for different needs. So I pick what is called participating whole life insurance. I also have one for my son, and mine cost me 231, and then for my son is 200. Participating whole life insurance has different purpose. So it's insured you for life. You are insured for life. 100 years thereafter, you are good to go. But there are other advantages for participating whole life insurance. When you pay your premium, you are also building cash value in that policy. So it would mean in some time to come, you can access some of the cash just in case you need it for any emergency. So it builds cash inside. You don't have to wait until you die so you can get the cash. So you also eat your policy when you are alive. Number three, this policy has 25% goes to cost of insurance and 75% goes to your long-term investment. A lot of people who understand this kind of policy, they use it for their retirement because the policy also had dividend. So the dividend is reinvested every year. So for you to want to have that freedom during your retirement, so you use this policy. So this policy also can be used as collateral to borrow money from investment companies or banks, because if you fail to pay the money, these companies will go to the company that has your insurance and they will claim the money from there. My second step was to have a stock portfolio. In fact, this one I did it this year. During coronavirus, Justin Trudeau's extra cash, so I decided to save part of it so I can get started. So we don't have to wait to be millionaires, so we can also participate in investing. And we also just need to educate ourselves on what it is and also take part in the market so we can also have our shares from the market. So I decided to save, and after that I pay some of my consumer debt, and then whatever was left I put it in this stocks portfolio. And then the main reasons why I have this stock portfolio is to serve as a second income. So we mean the stocks that I will be invested in, it will be those that pay dividends. So we mean mostly invested in shares. So here I pick companies and I'm trying to diversify my little portfolio just in case, because you don't know what the market could do. So I have what we call BMO. I erase my number here for security purposes. And BMO, it take care of the financial section. And the BMO is the part that hold a big section of this portfolio, which has 60 shares for now. But because I'm holding it long term, even if it has a gain of 595, I am not going to sell it, because the main mission or main reason why I have this portfolio was to get dividend from it. So I'm getting the dividend instead of selling it to get that cash. And down here, this is a growth stock, so it's just, this one will just be a temporary investment. So maybe later on I will just sell it and remove it from the portfolio. But the next thing was the REIT, which is Rio Canada. So Rio Canada is the next in the list that has 57 shares, and even if it's down by $10.72, that one doesn't really worry me, because the company, I have really done the analysis. So this company is a good company. It could be like fluctuating a little bit, but because I'm going long term, I'm managing risk through that long term thing, so it will be spread out. And on top of that, I will be getting that dividend every month. It doesn't matter whether it's $10 or $5. It's free money. You're not doing nothing. And VDY is only two shares, and I'm really planning, maybe before the end of the month I get it to 10 shares. So I'm really trying to be invested in asset instead of liabilities. So if you put your money in liability stuff and then you don't grow, but if it's asset, there's the hope that it's going to grow one day. So this stock portfolio was mainly established so I can get dividend paid every month. So that dividend every month is passive income. So if it's passive income, imagine if it grows into like 2000, you will have that little bit of financial freedom. So that's why. The next thing is RRSP, saving account. So RRSP, my RRSP is mainly for this program called First Home Buyers, right? So if I save on this account, and it will help me to save on tax. So we mean government will return some of the taxes that they had taken from my paycheck before. They return it back to me. So that's money. And when I hit the target in RRSP, the one that can be used for down payment, I can also withdraw that money from this RRSP saving account and use it for my down payment without paying no tax. So you have benefited both sides, from withdrawing from RRSP and from also getting money back from the government. And this account only have 500. I just started out, and I'm really looking forward to enjoy the journey of hitting that target. And next thing is TFSA emergency fund. So most of the time I keep like 1,500 on this, because I'm not that rich to have that 3 to 6 month living expenses. But that's the goal. So if you have that 3 to 6 month expenses, just in case of any life emergencies or something happen, you can't go to work, and then you really have that peace of mind instead of going to bother creditors or or paying that interest because you're borrowing someone money. So it's a good thing. So 500 balance now, but we need something to do with 6,000 to 10,000. Next thing is what we call TFSA Opportunity Fund. So this one is like some other new name that I found too. Just you can grow this account, and if just in case you want to do some business, you have any other business opportunities that you need to try it, and then you can use this fund to start that business and try your best to make more money from this opportunity funds. You might not invest the whole balance, but from it you can take some part, and then you try if you can make more money in other opportunities. So this is the end of the video, guys, and thank you for watching, and I will see you next time.